Inside Commercial Property with Rethink Investing.
Australia's largest and most comprehensive podcast covering all things commercial investing.
Hi, good everyone. How you going? Welcome to Inside Commercial Property. Phil Tarrant here, your co-host. Been on the guide with all the information. It's Scott O'Neill, my co-host of this great podcast, which we've been recording all through 2020. Welcome to 2021. Scott, how you going?
Very well, mate. It's good to be here again.
It is good, and we've had a pretty good run these last couple of months. When did we start this? It's got to be May.
Oh, it's sort of halfway through I think it was, May, when it was a bit nervous with the pandemic and everything starting up or finishing up, depending on what state you're in. And yeah, it's been a whirlwind of a year, but yeah, definitely finishing strong, that's for sure.
Yeah, it's really good. And I really enjoyed the backside of 2020. It was a very different year for most people, but 2021, here we are, brand new year. Lots happening. You guys and girls at Rethink Investing, business as usual? You working through the break?
Oh, yeah, because look, 2021, it looks like it's going to be one of the busiest years for property ever. So it will be a year of growth and trying to keep up with demand and finding properties. So it will be a challenging year for business, but a good one, I think.
Yeah, it's really cool. And I really enjoyed, I guess, our pathway over 2020. Number one, launching this new podcast, Inside Commercial Property, which seems to have resonated with everyone. So I guess big thumbs up. They talk about your skills and experience and insights. So that's pretty good. I don't really get any mentions on the reviews, so I'm quite happy about that. I'm a right
top host in Australia, mate.
The shadows. But for all those who are tuning in and leaving those reviews, please keep them up. We get a real kick out of them. It's just not myself and Scott here recording this. We've got a big team, both within Rethink Investing, but also here at Momentum Media, who do all the heavy lifting and make us sound good. Now, Scott, over 2020, we did about 7 episodes, and we broke down commercial property sort of 101 type stuff at the start of it, going through the different sorts of assets, how you go about effectively investing in commercial property, what you can be doing better, what you see the best investors doing, and you just sharing your insights and knowledge on breaking down potential deals and working out how to invest. So we're here right at the start of 2021. So I thought what we should do is really set the scene for this year, what it's going to look like. You said it's going to be one of the busiest years ever in property, and I think you're probably right, both residential and commercial. So I thought what we should do is go and look at the predictions for 2021 and just give some scope, give some architecture for how people can start approaching this. Now, what I've done, Scott, is I've been scouring the internet looking for some good predictions that will give us a guide to have a discussion. So what I've done, I've pulled out an article from realcommercial.com.au. So that's part of the REA group family of organisations. You most know them from realestate.com.au. So this is their commercial side of the business. They did a pretty good article on the backside of 2020 in December, early December by memory, and they've listed the 8 predictions for commercial property in 2021. Now, their view of commercial property is a little bit more expansive to what ours has been on Inside Commercial Property. We're sort of looking at the more, we're not the big insto funds and where they're spending their money. This is more about your, inverted commas, average Australian looking to create wealth through property, in particular commercial property. So we're talking sort of, the more affordable properties, I guess. We're not talking about office towers. We're talking about warehouses, small shopping centres, small, high street based stuff. And that's been a big driver of our discussion. So we'll have a chat through these predictions, Scott, on the basis of the assets that you typically buy for your customers. And let me just read the start of this article out just to give you some a bit of an idea of what it's all about. It says Australia is now technically out of the COVID recession. Jobs are rebounding rapidly. Several vaccines are looking promising. Money is cheap and readily available, and governments continue to spend big. Additionally, all these positive changes are being supercharged with high levels of liquidity. This is good news for commercial property heading into 2021, while other sectors can expect a bumpier road ahead. Here are 8 predictions for commercial property in 2021. So before we get to the first prediction, Scott, a number of vaccines were rolled out in December that we know. They started injecting people the vaccine in America and in the UK. Not yet really underway here, but we've secured our vaccines. We know what's happening. Travel is starting to open up. They're working out ways to get this vaccine across the globe. Government stimulus here in Australia has been strong for those that need it, with the JobKeeper 2.0 continuing, a whole bunch of other government stimulus to get the economy moving. We're now officially out of a recession. We've now moved out of it after 2 quarters of negative GDP growth. So things are looking up in Australia.
Yeah, they are. And look, they've been looking up for quite a while, even before the vaccine announcement, because Australia did perform so well in the pandemic. We didn't really see any spikes outside of probably Melbourne that were, to the point where it hurt commercial property. And look at the interest rate environment and the savings rate of people have really encouraged people to invest throughout 2020. And I think 2021 is just going to be a similar story, but there's less of the concern about the economy, which could actually double down on what we've seen in 2020. So I think, all around it's going to be a very positive year for property. And we're at, consumer sentiment is at 7-year high. So the last time it was this high was in 2014. Which was a pretty good year for property as well. So, and it's on the way, it's trending upwards as well. So sentiment being, as high as it is a very good thing for property.
You made an important point there. You said that the interest rate environment, so money is as cheap as it's ever been. And that's good if you are looking to borrow money. But for those who traditionally keep large reserves of cash in some sort of instrument, whether it's just in a bank savings account or some sort of fixed term cash type product, they're not getting the returns that they used to do. So you said they're now, rather than keeping their money parked away in one of those type of investment vehicles, they're shifting into the investment, and commercial property is an attractive one. Yeah,
and that's a massive trend we've seen. We've had a lot of non-traditional property investors come to us as clients saying we need better returns on our money. So it is a scenario of just shifting, getting those 0 or 0.5% returns in a bank account into a property that might produce you 6, 7, 8% plus growth. So, it's sort of you're almost forced to invest, or you'll see your money dwindle away in a bank account. And that's a concern for people. So investing, you're almost forced into it when interest rates are this low.
Just to make sure you get the utility of your money as effectively as possible. Some people were happy on a term deposit getting 2 to 3% now. That's just not cutting the mustard, right?
No.
Yeah, very good. All right, let's get into some predictions, Scott. The first one here, and this is from an article on realcommercial.com.au, part of REA. Number one, focus on getting CBDs back on track. I'll read a quick abstract of this, Scott, to give us some framework. Australian CBDs were hit hard during COVID-19 lockdowns as office workers remained locked out of city workplace and international students vacated university hubs in Melbourne. This was exacerbated by longer running restrictions, as well as greater resilience on students across all CBD types, including office, retail and residential. There's been rises in vacancy rates 2020. This we know. So this prediction here is that CBDs need to be the priority and the focus to help stimulate economy. And we saw just in New South Wales, I think it was the 14th of December, the changes to the government mandate around if you can work from home, or if your people can work from home to, hey, get people back into the office, because this is a central driver of stimulating economic activity. So we're going to see now governments and businesses encouraging people back into the offices, which is good for office market, which has a flow-on effect into what they do at lunchtime. And that is they buy food, they buy clothes, they get their shoes fixed, they use dry cleaners, they get their hair cut, all this sort of stuff. So this is the nucleus of CBDs and how important they are.
Yeah, and look, the government has to do that because these CBDs are a massive driver for the overall economy. And, I've seen a survey out, they interviewed about 100 of Australia's largest companies in December, and they said 65 or 63% of workers preferred flexible work arrangements that they got in the pandemic. So, employees in general don't want to be in the office or forced to. So there's going to have to be, for the CBD's sake, a bit of encouragement to get people back in because they don't really want to en masse. But, long term, it will slowly go back to what it is. And, the government will do what it needs to. And that might include increasing immigration over the coming years as well to, get more skilled migrants in. And they're just going to boost the population. And lack of migration from overseas has been one of the killers for the CBD market in 2020, because it's not just the fact that people aren't moving in there or catching trains. It's also there's less migrants coming to Australia that generally will occupy these areas.
Yeah, and you're going to see these public health orders changing to get people back into CBDs, hopefully at a point in time. They're talking about it now with potential border openings to get more international students back in Australia, huge drivers of the economy, in particular the rental markets. But a lot of international students' parents actually buy them a place wherever they're located to help park their money in Australia. So you're going to see this moving forward. But the councils will work to get people back into CBDs. I think this focus on flexible working will continue. And they're talking flexibility now, not as in, hey, work from home. It's about, you know what? Why don't you change the time that you do travel just to get people into the CBD? So I'm sure the restaurants and the cafes are pretty keen to get people back in there. So that will see a bit of a change in fortunes, I think, into the office market. I think some people would have bought well office space in 2020. Maybe they're going to be the guys and girls laughing all the way to the bank sort of come 5 years down the path, but who knows. Prediction number 2 here on this story from realcommercial.com.au, investment in commercial property to continue. Well, that's good. I'll quickly read out the first para on this bit. There's currently no shortage of money, which is why, despite rising vacancies, we're not seeing a corresponding drop in values. Interest rates are expected to remain low for some time, and the ability to borrow will continue to be eased. Yields will drop off the back of rental declines and stagnation. But even with this, there will continue to be a decent gap between this and the government bond rates, primarily because these have also fallen, while local buyers will dominate. Offshore groups are also likely to participate in 2021. This year, we saw a lot of activity from Europe and the Chinese, investment ramping up towards the end of the year. 2021, Australia will continue to be attractive given how minimally impacted we have been by the pandemic compared to the rest of the world. We've spoken about this a number of times over 2020 in our podcast, Scott, about the attractiveness of Australia as a place for people to generate and park wealth if they are from other parts of the world. And that's going to be a driver moving forward. Imagine immigration counters across the world people will be lining up to try and get their ticket to come to Australia.
Oh, exactly. Like, look how good Sydney has done, or, to a lesser degree Melbourne, but, Brisbane, Perth, all these cities, how they've gone versus the big ones like London, New York. These big cities are, where people would invest in have had a pretty terrible 2020. And Australia looks like a safe haven. We've performed well. We're the economy is quite strong. It bounced back quick, and people want to live and invest here. And I think that's going to be a trend we continue to see. So there'll be more high net worths try dispose their money into Australia, and that'll be across all sectors, I think. And commercial will really benefit from it. Like that article said, there is a very big gap between the return and the bond rates. So you're going to make good money if you invest well in commercial property, and it's a cash flow driven type asset. So cash flow is the hardest thing to find in today's world with investing. And capital growth is less reliable, which makes cash flow even more valuable. So it's going to be one of those things that just keeps going. And as long as the rental market holds up, and this is one of the keys we look for when we invest, you want to invest into a strong rental market. So that's one of the things why I'm a little bit more defensive with the office, because that will take a bit more time to recover compared to, say, industrial, which has already got a good, strong rental market. So you've got to get the right rental market.
And that's the important point there. They're talking about investment in commercial property to continue. Commercial property is a big catch-all. There's a lot of different parts of it, right? And some people get it right, some people get it wrong. The third prediction here, Scott, is growing interest in life sciences and medical-related property. And we've spoken a fair bit about medical-related assets over the course of 2020. And it writes, the arrival of the pandemic has led to huge investment in research and development in the pharmaceutical sector. For property, life sciences refers to pharmaceuticals, biotech and medical technology industry. So catch-all is just medical, Scott. Although a tiny sector compared to office, residential, retail and industrial is growing, and COVID-19 has accelerated this globally. $10 billion of life sciences probably changed hands in 2020. This is likely to be higher in 2020. You like medical-orientated assets, don't you?
Yeah, look, it's one of our big targets at Rethink Investing. Throughout 2020, we probably bought about $50 to $60 million worth of the stuff for clients. So little medical centres, even things like pharmacies and, I know it's not quite medical, but vets and things like that. Anything kind of medical related or essential service is a strong tenant. And you just got there's not much of it. So there is a high demand. People feel safe owning that for a very long period of time. And that will remain a target in 2021 because, we are an aging population. We're older, we're sicker, this isn't going anywhere. So, these are long-term businesses that are just going to be strong forever. So, like it said, it's a small industry. There's not much of the stuff out there, but that makes it unique and scarce, which can account for more capital growth as the demand rises.
There's an interesting point in this article, and it probably steps outside, and this is the difference between the type of assets we're talking about through this podcast versus where institutions or institutional investors would be putting their money. It says the one sector that's likely to continue to see a shake-up is aged care, particularly given the high rates of mortality in aged care facilities during the pandemic. The Aged Care Royal Commission, which delivers its final report in February 21, could also have an impact. You don't really that's a different sort of realm, isn't it? Sort of investing in aged care type commercial.
Yeah.
That's real specific.
For us, it's a little bit outside of our scope of knowledge. You know, it's a whole different ball game. So it's like getting into hotels. You know, it's a different specialist area, and you really got to put a whole lot of time and effort. And I think there's just more simpler ways for the average person to invest. But generally, that's a lot higher dollar amount as well.
Yeah.
So that's another reason that it's kind of more of the institutional space. And, you know, we've seen in 2020 a lot of, like, I think there are potential shakeups in that space that would concern me. But look, I don't know enough about it to want to put my own money into it. And that's a big thing.
And if you sort of operate in the aged care space, it is a business. You're just using property to facilitate that business. So very different from buying a medical centre that a couple of doctors operate out in and
Exactly.
see some patients. So beware. It's easy to get that wrong, and most people do get it wrong. And no doubt the Royal Commission next month will show some of that. Number 4. In terms of predictions from realcommercial.com.au for an article they wrote in December, industrial and commercial farming to remain popular. So, Scott, both industrial and commercial farming were popular prior to the pandemic, and interest accelerated during COVID-19 or 2020. The industrial sector has done well out of lockdowns, and many of the habits we developed during the pandemic, such as increased online shopping, are likely to stay. For commercial farming, there are longer trends at play, including changes in investor types as well as better weather conditions in many places. So we'll touch on the industrial side of things in a moment. Commercial farming, Scott, again, that's a pretty specialised area, and there you're talking like, you know, salmon farms, right? And this sort of stuff. It was a big net in the middle of the ocean. This is pretty specific stuff.
Exactly. And it's a whole different lending game. Yields can be lower because you're buying large parcels of land. You know, if you're buying a grain field, you know, it's the implied value of the land, like how much it yields. And again, it's specialist knowledge, but also higher dollar amount and lower yield. So for most everyday investors, it doesn't really come into their search patterns. But you know, industrial on the other end it's what we invest in most. It's done incredibly well through 2020, and 2021 looks like it'll be even better because there's an e-commerce boom going on, and COVID has actually sped it up. And what I like most about industrial is the rental market is strong. It's not just the whole capital market. It's the fact that there's tenants looking to rent places, and there's, you know, the amount of businesses we've seen grow 30% in 2020. And they need an overflow warehouse just to keep their extra stock. Like that's a trend happening from Perth to Darwin to, you know, Hobart to, you know, Brisbane. It's Australia wide, and that's the type of stuff you want to invest in. When there's good strength in the rental market, that means rental growth. When you get rental growth, that means capital growth. It's a cycle that will make you money if you get it at the right price day one.
So pretty much anywhere with a large regional population is going to need some sort of warehousing, right?
Yeah.
You know, if it's out in the regional areas, it might be farming supplies, for example. If it's sort of in the more suburban areas, it might be, I don't know, phones or whatever electronics people buy. Is there any sort of online shopping based connected warehouse or logistics centres that you're concerned of or wary of?
No, look, I'm just concerned when there's not good infrastructure around it. So you got to be near good access to highways. You know, I like buying near airports and ports and stuff like that because that's infrastructure that's long term. And, you know, in 20 years' time, none of us know what the economy is going to look like. But if you're next to an international airport or, you know, you're close to a CBD in a major regional hub that's growing, you tend to think you'll be okay in 20 years with that because you will be able to re-let that property. Yeah. If you go too regional and it's a declining town and it's a very big warehouse, your pool of tenants are going to be quite low if you lose your current one. So think about reletting and why future tenants will want to be there. And, you know, look, that's what I'd get concerned when it gets too regional. But if you're near a big airport in a regional city, that's something I like because, you know, we're seeing in 2020, a lot of these regional cities are growing because there are people moving from the cities to these areas. And look at industrial properties in Byron Bay. They have literally got to the same yield as Sydney or even lower in some cases because the demand for them is so high. That's not an international city.
Yeah. What do you think about, you know, it's good to have warehousing space or logistics centres, but if the businesses use or use the premises for quite sort of unique things like, you know, storing of chemicals and all this sort of stuff. Does that make you a bit nervous?
Oh, no, look, because a lot of them have specialist zoning for that. So, you know, if you've got like a cool room storage set up or, you know, you're storing batteries, there's not much zoning for that. So there's still businesses that need the space. So, You're going to rent to a more specialist tenant. They might stay longer. You might have a smaller pool of tenants, but they've got a smaller pool of properties to choose from. So, but look, understanding that market is important rather than just going to buy it, because there are pros and cons to every situation.
Yeah, absolutely. And we've spoken about this next prediction for 2021. Shopping centres will perform better in Australia than overseas. Up to a third of shopping centres, Scott, in the US are expected to close in coming years as retailers, both small stores and large anchor tenants, continue to file for bankruptcy amid health crisis. COVID-19 has also had a devastating impact on Australia's retail sector, which has now flowed through to the lowest rental returns for shopping centres ever recorded. You only need to go to a shopping centre now, you see this, right? For shopping centre owners, it will be hard work to fill retail vacancies in 2021, and they may have to get used to lower returns. On the flip side, though, Scott, this article writes, it is unlikely that Australia will see the same level of shopping centre closures as in the US. The main reason is that Australia's tighter planning controls means we have far less shopping centres in the first place. Per person, Australia has already half as much retail floor space than the US, which means far fewer closures. Now, we spoke about this, I think, in episode number 6. We're talking about when you're investing in shopping centres and the type of businesses that you want to be using it. And I think our conclusion was if you can buy stuff off the internet and that's where the stores, that's what sort of stores there are, maybe less attractive. But if you're investing in shopping centres that have essential goods that you can't get from the internet, i.e. a loaf of bread or a bottle shop or a small medical centre or a small little supermarket or the pie shop or whatever it is, that's better stuff, right?
Yeah, and look, like that article said, a lot of people say, malls are closing in the US all the time, but there's more of them and they're set up differently. Like they're the big arcade style, like you go to the cinema.
Centers, yeah.
Look at how did cinemas do in 2020, terribly. But think about little neighbourhood shopping centres where, you drive in, like you said, you go see your doctor, you get your hair cut. You might go to a physio or something like that. You've got to go to these places, and sure, you can buy your groceries online, but most people don't want to do that, and it's not viable in regional Australia or small sort of outskirt towns to deliver all that kind of stuff. So it's less reliable. So I think the neighbourhood shopping centre model will continue to be strong, and it has actually been strong in 2020, except for the March and April when there were forced closures, but throughout the rest of 2020, it was actually a pretty good year for shopping centres, and we saw yields tighten because people kept paying more and more for them. Rents didn't really drop across the board outside your major retail type areas where there was a little bit of that going on, but I see underlying strength because it's, like you said, there's not as many of them around, and you just got to get the right mix. Like if you're buying a business, like you said, that can sell it all online, that is a risk that you'll lose them. And then you've got to look at the vacancies in the area. Is there growth? But people still want to go to shops. And that's, we're not going to only sit at home and buy every single thing online and never go out. That's just, it's a boring way to live.
It's going to work.
No.
Yeah. And, I sort of look at shopping centres and I guess there's a difference between, and maybe you can explain this. I think about your local suburban shopping mall versus a shopping sort of centre. And a shopping centre to me is like, a horseshoe-shaped sort of set of shops that everyone parks in the middle and you just go from place to place and you've got your hairdresser and your butcher and that sort of stuff versus an actual mall, which everything is inside, and that's where you got your fashion shops and maybe a gift area or something or other. They're two very different things, aren't they?
Yeah, and look, I remember in 2020, the amount of work the local cafes were getting in suburban areas, and they're all often part of a little set of shopping strips or, like you said, horseshoe-style areas. They've had a great 2020, and it's because there's more people in their local areas. The CBD shops struggled more. So it's the movement of people. If there's people around these areas, then I think it's going to be a pretty good year. So, there is a big difference. Retail is not all equal, and you normally go off, is it a destination type retail? Do you have to go there to enjoy their product? If they can, I see, strength in that tenant.
Okay. This 6th prediction here, Scott, office design will continue to change, and I agree this is the case, and this is going to be connected with COVID. The article writes, many Australians are now returning to the office, but it is unlikely the design of most offices will remain the same due to social distancing requirements. More meeting rooms, well equipped with video functionality, are necessary for distributed teams, and although social distancing measures are no longer so strict, there is likely to be an expansion of workspace ratios in many organisations. Suburban office spaces could also see a boost in interest in 2021 as more people prefer to stay closer to home. However, offices ultimately play a role as talent attractors and keepers of culture. People like to interact, and career progression for young people can be hard when you are stuck at home. I agree with all of that, but things are going to change, mate.
Yeah, look, and I was talking to, a little bit off topic, but I was talking to an architect, and they basically specialise in repurposing office towers. So they'll keep the elevator shaft, they'll keep the facade, well, they remove the facade rather, but they keep the bones of it. And they turn it into residential, and you might see more of the eco-type sustainable building style because you keep it, but you can put plants on the outside of the facade and all that and totally make it look like a brand new building. So you might see if office space, the values of it drop enough, it might be worth more as residential. So the building itself always have, a ground value to it. And there will be, a little bit more separation. Like the hot desking model looks to be getting phased out. There's more of the WeWorks of Australia where you sort of, you got your own space and it's yours and you pay for it rather than getting a big office space for 5 years. And, there'll be so many of these changes. And like I know yourself, you're involved in this space as well. You've seen there's still a need for office space, but it is changing how we look at it.
Yeah, and I think a lot of organisations, and the article writes about it, how, offices are in many ways are keepers of culture. So even though you have a distributed workforce, I think people still need to come together. And it's very different, the type of work that you do over Zoom, which is a lot more sort of transactional versus sort of activity-based working where you get together and talk about stuff, right?
Yeah.
And offices in many ways will be the keeper of that culture. It's really funny, it's you speak with. It's an interesting phenomenon. Most workers, a lot of workers don't have the privilege of choosing not to go to the office, right? Like frontline workers, so doctors, nurses, labourers, builders, chippies, van drivers, the list continues, teachers, right? They don't get to make a choice around, I don't really want to go to the office anymore. It's only really knowledge workers that have that opportunity. And it's interesting, I have this chat quite a lot, Scott. They reckon in the UK, for example, they came out saying, here's a question for you. What's the biggest health concern, medical concern for our generation? What do you think it is coming out of the UK?
Probably mental health.
Loneliness.
There you go.
Loneliness. So I think the UK have actually appointed a minister for loneliness.
Really?
That's how important it is. And loneliness has a whole bunch of repercussions. One of them is challenges in mental health and depression and all this sort of stuff. So now people live in an environment where they don't need to leave their house, like they've been locked up, right? But you get your phone, you get contactless delivery of everything these days, whether it's your Uber or your office works, and now people are making the choice not to go to work. So I think people should be encouraged to get out of the house and do stuff, and I think offices play a central role to that, and I think a lot of organisations will embrace that moving forward.
Yeah, and look, and I know personally with my staff, we sort of have 50% love the office, 50% hate the office. So we are looking at flexible work arrangements as well. So never thought we would look at that a year ago. It's amazing what COVID has done with reshaping how you sort of look at an office. But I agree with you. There is a level of culture, you need to maintain. You can't just never have an office, but you don't want to always be in the office. So it's something in between, and, none of us really know what that looks like, but we know there will be change, and, it's probably for the better.
Yeah. Yeah. It's good how often forced change is good change, and it's happened right through the generations and the centuries. But number 7, Scott, of the predictions for 2021 for commercial real estate, realcommercial.com.au say commercial real estate in regional areas to see high demand. In the June quarter this year, the Australian Bureau of Statistics reported the biggest movement out of capital cities into regional areas ever recorded. It is likely that this will have continued for the rest of the year, and this talking about 2020, and this will flow onto increasing demand for commercial property in regional areas, whether it is a shared workplace building in Byron Bay, a new distribution facility in the Gold Coast, or even a few more shops in Mount Gambier. Population growth is a key driver for commercial property. This means growth in rents and values of many regional parts of Australia. So on the cards 2021. So what this is talking about is this big sort of thrust in 2020 for sea change and tree change. I think a lot of people going, hey, I don't need to be wed to the capital cities anymore. I'm going to go and live in a lifestyle location. A lot of people have made that move, whether or not they're going to be happy with that decision come a year or two's time. And there might be a reverse of that, people flocking back to the cities and not getting the same value back from the properties they paid for is one thing. But there's going to be this shift, according to this article, that commercial in regional areas should see high demand because of what you spoke about beforehand, is population transition.
Yeah, and look, I can tell you why we target regional. It's for the yield. So as an investor, yes, because we're buying existing, normally long-term businesses. So we don't really, I personally don't get too involved or excited about what the last 12 months of trend population has been, because like you said, it could reverse. But I like buying in regional because the yield's higher. And as the yields have tightened in the capital cities, like you can buy a laundromat in Double Bay at 1% yield. You can, even industrial properties in Brisbane have dropped from about 7 to 5.5% for good tenants. Like, it's getting tighter. So what if you go into a major regional centre and you're getting well over 7 to 8% net returns for good properties? So I think it's a return thing more than anything. But like you said, there will be short-term shifts in rental markets. But, if you're buying a long-term medical centre or a logistics business, you don't really care too much about, is there an extra 500 people living in this town? But long-term, that might actually boost the rental market, which is kind of a little side thing, I think.
So how do you make buying decisions then when you're looking at regional markets? Yield is a play. But what are the other sort of key fundamental drivers you like to see?
So look, with higher yields, there is an implication of a higher risk. That's why there is a higher yield. You don't just get everything for free. So there is the mindset that it'll be harder to find a new tenant. So for us to go regional, we need to look at the relatability of a property. And many times over the years, we've pulled out of deals we've nearly bought, like supermarket type ones, because we think, what if there's another supermarket that comes up in this small town? We're buying an IGA, and what if Woolworths comes to town? It's going to wipe it out. That's why you're going to get a very high yield. But for many, it's too high of a risk. But if you buy, like a row of shops and you've got 10 different little tenants, and they're, that's probably a good play. And you just got to work out, if you lose one of those tenants, how long does it take to fill? So for me, it's really about the relatability. Like, you got to simplify commercial where you can, because you can get, a little bit too concerned about competitor analysis and all that kind of stuff. But the reality is, it's a supply-demand thing for the rental side. And if there is not much supply of those rentals and you're fully let, and there's not much vacancy in town, then it's probably a worthwhile bet.
Okay. Scott here, this final prediction from realcommercial.com.au for 2021, commercial property build-to-rent growth and demand for development sites expected. Interest in build-to-rent picked up during COVID-19, primarily because big rental drops, particularly in Melbourne and Sydney CBDs, saw investors withdraw from buying new apartments, while the development sites will switch to build-to-rent in 2021. It's likely that building approvals for units will recover. With the vaccine, international students can return and migration can start up again. This means more demand for housing. So this is about build-to-rent commercial-based properties. What's your thoughts on that?
Look,
or is it mixed sort of use type stuff?
Yeah, look, it could be anything. Like, we're seeing a lot more, tenants building and then renting and then selling off. And the reason for that is because prices are growing. Like, it creates a development margin. So imagine you're an industrial property, and you basically build it and you put a 10-year lease on it. You'll be able to sell that in this market for a fair bit of money, because that's a high demand product. So we are seeing a lot of that. As prices rise, the development margins creep back in. And one of the reasons why I don't think we've seen a lot of development, particularly in the industrial space over the years, is because it's been undervalued, which means that it hasn't been a real profitable exercise to build. But now that the prices are growing, you're going to see more of that come into it. And that goes for all sectors, really, including the office market.
When they're sort of creating these new suburbs, you think out the western suburbs of Sydney or southwest Sydney, are they building your industrial areas into them, or industrial areas are pretty much capped within the large metropolitan areas, not sort of developing new stuff? Oh,
look, they are. There's pockets. So every city's got their own urban sprawl going on, and, you need a certain ratio of industrial out there. But I generally find it's, it is lower or more undersupplied than the actual residential market. So, because it's less desirable, industrial property, and, it's not the go-to for a local council just to whack a big industrial park in an area. But there is a need for it. Like there's a lot of it going on, between Gold Coast and Brisbane, up the north side of Brisbane. You've got north side of Perth is growing quite well. You've got Western Sydney. Melbourne's got all their own, areas that are getting, towards the west and the north and the east. So it's all part of local planning. It's a must. And I find, you just got to be careful buying into those scenarios too, because if there's too much of it, then it might be for the short term at least, a weak rental market. But then you still can buy well in those areas if you buy a property with a good lease in place. Because imagine you've got a complex and they're building 100 of them, and 50% might get sold to owner-occupiers, and then the other 50% are investors. But those only get sold when they've got a lease in place, because investors generally don't buy vacant units. And if you've got a 3-year lease in place, by 3 years you would have thought that the rental market's completely sorted itself out. And then you're into a more of an infill style, established suburb by then.
Interesting. So what do you reckon about those 8 predictions, Scott? You reckon they're on the money? Is there anything you would add to them if you had to apply Rethink sort of view for 2021?
No, look, they match exactly what we're seeing on the ground. So, I don't get too involved in the predictions because so much can change. Like if you look back at all the predictions in 2019 about the property market, that didn't factor in bushfires, a pandemic-based recession. So, you've got to look at what's happening on the ground, and what is happening on the ground like throughout the end of 2020 and now the start of 2021 is it's looking like the busiest, most high demand market I've ever seen. And it's off the back of people don't know what to do with their money. Confidence is, like I said, hit 7-year highs, and that's trending upwards still. Like you don't really meet anyone who's talking down the property market anymore. And you're in this game as well. Like there's always someone saying, it's watch out for that, or that, but there isn't much of that going on. There is an affordability argument in the country. So some of the highest value cities might not keep going because they've hit a glass ceiling to a degree. But I think 2021 will be quite a good year for capital growth. But you've got to be careful in these markets because you might overpay. You might buy, something I'm very big of is getting a high yielding investment, because if you buy a property that's negatively geared or not giving you the cash flow and interest rates rise on you in 5 years' time, maybe it's not the best investment to hold. So, you've got to pick the right pockets, but 2021 on the ground, it's all about low supply because not many people want to sell, high demand, lots of people are keen to invest, and that is a recipe for capital growth.
Well, let's look forward to 2021, mate, and recording the podcast Inside Commercial Property. Hope you're enjoying it. What's your biggest prediction for 2021 outside of it's going to be a big year for property?
Oh, put me on the spot.
I know. That's what I like to do.
Oh, look. It's probably I'd say it'd probably be the best year for property in the last decade, I'd say. So that's my prediction, and it could be for residential as well. But look, like I said, there will be a point where it becomes a little bit too unaffordable. So you've got to be careful not to get too excited. Don't just buy because you think it's going to grow 5% in the next 6 months. It's about buying with the right fundamentals. So back to business, and that's going to be good for property.
Yeah, nice one. Well, thanks for 2020, Scott. And it's nice for us to sort of enter 2021 with Inside Commercial Property. We'll be here all year delivering all the information that you need as you either shape your strategy in commercial buying or open your eyes towards it outside of residential. Scott, we like questions, don't we? We want to answer them on air. Any questions at all? What's the best email address? info@rethinkinvesting.com.au, or if you just go to our website, rethinkinvesting.com.au, you'll see there's a couple of spaces to start replying, and we'll get back to you. Okay, cool. So that's questions if anyone wants to ask on the podcast, or if they want to have a chat with you guys, they can do it all in the same place as well, right?
Exactly.
Okay, nice one. Thanks, mate. Thanks for coming in. I know you're on holidays at the moment, so it's good for us to get this podcast done early in the new year as everyone's sitting there, no doubt, on a beach or drinking a can of VB somewhere, thinking about what 2021's going to be for them and how they're going to capitalise on what is a very interesting property market. So remember to get in touch, keep connected. We're here every month on Inside Commercial Property. Hope you enjoyed the podcast. Go back and binge listen if you just found us. Everything that I hope that you'd want to think about commercial property we've covered thus far, and if we haven't, we will do in the future. We'll be back again next time. Until then, bye-bye.